Ritesh, good morning. Great to have you with us here. Thanks for your time. Ritesh tracks the steel metal sector and he also looks at the cement space. Let's start with the cement space, which has seen some activity, some buoyancy in the recent, 2 fortnights or so. Ritesh, what's your overall construct as far as cement stocks go in India, and how would you look at it?
The cement stocks have definitely run up, but we continue to remain quite positive on the entire space. We do a lot of channel checks. We clearly believe that infra demand is coming through, be it roads, irrigation or bridges. So that part of the story is definitely kicking. If even one looks at the residential launches data on the construction side, the preliminary data points that we have, again, it's quite encouraging. Again, we are quite hopeful, and the recent forecast from SkyMet, it's something that we are looking at closely. So if monsoons are on schedule and the SkyMet forecast have been pretty nice for this year. So if that part of the story comes through, basically we will see 40% of rural income, which is agri derived. The demand from that part of the story kick through, again helping the demand. So bottom up, clearly we see definitely things moving on the infra side. We are hopeful on monsoons, and even if one looks at the top down several variables, be it electricity consumption or auto sales, it's again pointing in the right direction. So yes, we do agree that the cement stocks have moved up, but we definitely see more value in the space.
Yeah. You know, the one concrete area where for months now we've seen activity, which is ordering activity, is roads, right?
That's right.
But roads is a very small percentage of this overall cement consumption, right? It's about 10%, 12% or so.
That's right.
But beyond that, I mean, housing, right, is one of the biggest. Core sector projects are another big consumer of cement. These are areas where we've not seen much activity at all. I mean, I don't know how we can track the housing construction activity. I don't know if there are any indicators, but core sector projects, there has been nothing for the last couple of years.
Right. So to answer your first question first, say when you point towards roads, or say if one has to draw parallels, so say something like the dedicated freight corridor project on the western and the eastern side, if one looks at the direct consumption from this very project, it's nearly 4.5 million tons. It's not a quick game changer. But one needs to look at the peripheral development which comes along with roads or such massive infra projects. So land rates usually appreciate. You have a lot of construction activity which comes along with such projects. So that part of the story is definitely ticking. Second part of the story, as far as construction is concerned, yes, it's a major chunk, nearly 60% of India's cement demand, of which nearly 40% will be rural. We don't get housing starts in India, unlike West. But the way to look at is, if you look at the priority sector lending data from RBI on a monthly basis, that part of the story is definitely moving up in small bits. If this trend sustains, it's definitely going to do good for the sector. Besides this, if one looks at in the Cushman and Wakefield data on the residential launches, if one looks at for the Q4 data on a sequential basis, it's up 29%. And specifically over here, you see affordable housing as a segment which is definitely gaining steam. So it is definitely showing green shoots, and we were quite hopeful the space will work in the favor.
The other data point, which I don't know is the right one to look at, is the growth that all these housing finance companies are showing, right?
Right.
I mean, typically the loan size is at 8 to about 12 odd lakh rupees or so.
That's right.
So they've been doing very, very well.
Exactly. So that's another variable that you can also look at. So RBI lending, priority sector lending, it's for a ticket size less than 20 lakhs. So again, as we don't get exact housing starts data, that's an alternate way we look at from a top-down point of view. So yeah.
For construction, especially rural construction, even urban construction, you said out of the construction-led cement consumption demand, 60% is rural, right?
60% is total, 40% is rural, 20% is urban.
Okay, 40% of the construction demand is rural. Yeah, sorry. How significant are monsoon rains, I mean, essentially? as a driver?
So if you look at it on a standalone basis, we did this math long back. We did regression on regional monsoon patterns against the regional cement demand growth rates. You don't find a definite high degree of correlation for select region. You can't extrapolate it for the country as a whole. But we did, again, a lot of channel checks. One needs to appreciate that if one breaks up the rural income pie, you have 40% which is agri-derived. The balance 60% which is non-agri. You have typically a member or two from a family which is usually employed in tier 1 or tier 2 city in the metros. So if the urban construction goes well, these people who are working, the migrants who are working in the cities, they typically repatriate money back home. And that's also a main lever when they take any decision making on incremental, be it housing or be it auto. So we have seen housing starts positive on the urban side, and 40% of the rural demand, rural income, which is agri, if monsoon takes, that part of the story is also on. So we are quite hopeful, basically, for the demand to come through from a rural side.
It's an interesting statistic. You're saying 40% of the construction demand for cement is agri-led, right?
40% of the rural income is non-agri derived.
40% of the rural income is non-agri. Okay.
Yes.
Yeah.
And the balance is agri.
Okay. I mean, so the majority is agri-led still,
That's
right?
right.
Right. But a significant large portion is non-agri, non-farm-led, right?
That's right.
Okay. All right.
So one can't look at it
for
on
cement demand, is it a good thing or a bad thing in relation to the monsoon?
It's a good thing. If monsoons works, definitely you have an incremental positive delta which comes on. But what we are hinting over here is monsoons. It's not the only driver.
Yeah.
You also need to look at how infra steps in, how you have residential starts in both urban cities, tier 1 as well as tier 2.
The other way to look at it is that monsoon then is not also a complete savior, so to speak, right?
That's exactly
the commonly held assumption out there would be that, well, farm incomes and agri incomes are the big driver overall.
That's exactly what we are hinting to. So monsoons is not the only thing. There are other variables also, wherein we are seeing some green shoots actually, which will help the sector incrementally.
Okay, all right. Now, how do you break up cement stocks in terms of your coverage? Because these are regional plays, right? So you can't move cement over long distances. It's costly to do so. How do you look at it?
So logistics is nearly 25% of the cost structure, basically. So it's something which is quite important. So the preference that we have on the regions is we prefer central region first, followed by north, then east, and then south. What we believe is value growth incrementally has to be a function of volume growth. That is something which is very important. So far, the price increases that you have seen in South, I'm talking about last 2 to 3 years, not about the recent price declines. It is more on back of supply discipline. Now, if you're talking about 300 rupees per bag, what is the incremental value growth that we are looking at? Even if the volume growth comes through, so you don't have much scope over here. Unlike this, if you look at say something in North or in East, wherein the current pricing is more a function of demand and supply, and wherein we are quite hopeful on the demand side, we definitely think there will be value growth on back of volume growth. So fundamentally, we are on the demand supply angle, we are more comfortable. And we have most of our mid-cap buys, which are north-based proxy, which is JK Lakshmi and JK Cement.
Yeah. No, so you're saying that in down south, demand supply is evenly balanced, and pricing discipline is kind of held on, which has helped.
It is more of calibrated supply, which is helping the prices remain where they are.
Okay.
So incrementally.
And that was also, I'm assuming, something got to do with the better financial health of companies, right?
Exactly. So the other way to look at is if you look at the interest coverage spreads of the companies in South, you have massive leverage in South-based companies. Now, if the companies have to operate a larger guy or a smaller guy, it will be in the best interest of both the companies to actually push prices over volumes. So this is pure economics bottom up, which is clearly at play, and one can say it's a price signaling which is working pretty well so far. But there is an element of hope involved over here. So recently I've seen prices decline in South because a few smaller guys actually started pumping in more volumes. So that is the uncertainty that you live with if you have exposure to South-based.
The story in the North basically is one of demand you forecast demand to pick up, and then, I mean, that leads to better volume and pricing as well.
Exactly.
That's the story.
That's right.
North, by the way, is a bulk of the overall country's demand, right?
That's right.
60%?
Historically, if you look at South has been a major chunk, but currently South you're seeing operating at around 47-48% utilization levels based on our estimates. So currently Northwest, it's quite important, and that's the region where we have more visibility on infra projects as well as things actually moving on the affordable housing segment.
Yeah. What are your top bets, I mean, in cement? For our viewers, I mean, absolute returns is what matters, not relative.
Right.
Where do you see absolute upsides?
Right.
Meaningful upsides, yes.
Okay, so in the large cap space, we have Ultratech. Again, it is something which has run up, but we published a note today morning wherein we have increased the target price. We still see upside of around 15 to 20%. Other stock that we like in the large cap space is Shree Cement. For reasons well known because of the strength what they have on the cost side. Incrementally, what we have identified is they have a potential capability to increase the capacity from 25 to 50 million tons, of which the company has only announced 10 million tons so far. So volume growth will continue in the story, and they have cost on their side. So you'll have a compounding story in Shree Cement. In the mid-cap space, we like JK Lakshmi, JK Cement, and Prism Cement. Again, it are more proxies towards north and central cluster.
Prism Cement as well, right?
That's right.
All right, fair enough. So that is cement for our viewers. Ritesh, you also cover steel. There's this deal with Tata Steel which has happened. Before we hit air, you were telling me something about goodwill impairment.
Right.
Which has not been discussed.
Right.
Would you want to talk about that?
Right. So if you look at Tata Steel European operations, there has been a continuous cash burn, I think, for the last N number of years. The way in which they've gone about funding the European operations is via raising debt at the Singapore subsidiary. Now, the management has been quite opaque when it comes to disclosures on the debt covenants. So what I was hinting to is even if the entire transactions goes through, so we are only talking about Scunthorpe right now. So even if Port Talbot is taken off the plate, then there will be goodwill impairment which will come through. So effectively, we are talking about book value effectively reducing from 285, 290 rupees to around 145 rupees. So when it comes to covenants, definitely there will be some pressure on net debt to equity. But it is something that we expect the management to be more vocal about incrementally. And obviously the management would have thought about it given the transaction has gone through. But there will be definitely some pressure on the covenant side, which I think it hasn't been spoken much about.
You're saying book value after the goodwill hit, according to your calculations, can fall to about 145 rupees a share.
That's right.
Okay. I've not seen that mentioned often in research reports, etc.
Exactly. So basically, end Q2 fiscal year, they did report around 14,400 crores of goodwill, and post that you have this transactions. If it actually plays out, goodwill also will have to be impaired. So that math needs to be looked at.
Fair enough. Ritesh, out of time. It's a pleasure talking to you here on the show. Thanks very much. Do come back soon enough. Lots more to talk about in this space. Appreciate your time.